right, Bruce here. Happy weekend. Good Saturday morning. All right, let's jump into Misty. Boy, was there a lot of trades and was there some volatility on Friday. I wasn't, I was there for the early part and then came back in after the close. But let me just show you the chart. Let me shrink it down on my second monitor so I can drag it over. I'm getting delayed, but that's all right. This is okay. So I assume the internet is slow. They were doing maintenance also on Thinkorswim. So here's MSTR. The black between the grays is the regular trading hours. And look at this, right? Volatility in the pre-market, right? This is payday Friday. So what did it close at? We had closed it around somewhere over here, right? 1650-ish. The previous, I can look on May in here a second. So volatility up to 1710. Remember, we had 1610 and 1615 weeklies. Well, they cashed out around here, the best I can tell. They clearly didn't cash out down here, because if they cashed out down here, we were below those. You could have bought it back for a couple of cents, and we lost on those guys. So again, I'm not throwing these guys under the bus. They got a lot to do, and it looks like on one of our sells where we rolled the weekly, we rolled it back up here. So with it going down, we captured 42% of that big weekly already in this next scenario. So you got to really look at the data close. But what I had been seeing, and this frustrated me in the past, just as a reminder, I'm going to make up a number. Let's say that we've got a 1720 strike price. And we see this activity. We see it run up here like this. Okay, so the time premium is going to be $3 or $4 over the 1720 strike because you got the rest of the day to go. But I'll see them not buy it, right? They won't buy it back because they're like, okay, well, I'll just wait for the trading day. Well, then sometimes it runs sky high, right? And I'm like, well, you sold it for 20 or last week. You could buy it back for $4 right here, right? They could have even caught some of this, but I'm just giving the benefit of the doubt. So take it off the table so you got a 90% win on your bulk of your contract. And they'll wait for the whole day and it'll run up, say, 1800 and they buy it back. Well, then they write the next week's call up there, right? But they didn't have to lose that last week. So when you're going into the last day and you got 80-90% of your profit, just take it. So in this case, they took it somewhere here, but remember they sold 1615s and 1610s. The 1610s were the bulk. So they've been way up over it, 3-4 trading days, right? So they were like, oh, okay, well, it isn't going to get any better. And so at some point they took it, and I'll show you where, it could have been right in here. I can't tell the exact, but they paid a lot more than what they bought it for. Whereas technically here at the very end, they would have not had to pay but a penny or two. But the point was, sure, if they roll into the next week, they got a lower price, but we don't know what next week brings, right? The volatility. So just an FYI, so I give them a B minus. I don't give them a D or F because they did some other things that look okay. You'd have to examine this to the nth degree, and I don't ever want them to cut us off from being able to get these intraday trades on what they paid. They're not time stamped. I got to go through the option table and try and calculate where the strike price was, where the stock price was and what that meant for the option. Because I can do all that. I'm used to buying and selling options and studying it, and it can be done. It can be time consuming. So let me jump back into what matters to all of us. Okay, so we traded down to 1596, so minus 363, right? But these cryptos, they're earning the volatility IV ranking, which in turn gives us a good premium and allows us to get 70 or 100% yield. So overall, I'm happy. I'm not gonna just kick the crap out of a fund manager without being in their chair, seeing what they have to do and all that. But I'm still gonna tell you guys when I think we missed an opportunity. And all I'm saying there, at the end of the day, we could have made more on those weeklies, but we did make it on the ones that we sold. So thank goodness when they pulled the trigger on one, they rolled into another. I do the same thing when I buy my options or roll my options. You know, if I buy a stock and I'm long the stock and it's like a covered call and I'm doing it 3 or 4 weeks, as soon as I sell one, I'm selling the next, right? I don't play that game. Well, maybe it'll go up and I'll get more premium. I just figure the average will work, and that comes from many years. So I get what they're doing. So let me break this down. So here's all the things we had to buy back, right? All of these got closed. Oh, sorry. Let me. So 3102 down to 11. They were down 3.63. Okay. So that's that. Now let's look at these intraday trades. I've already kind of hinted what all went on. And then I'm going to show you in holdings. I did something new to break it out for you guys. I left a full 1 week up there, all the stuff we sold it for, what we bought it back, and then I put the new one down below it. So this way on the Friday when I close out, I can summarize it all, plus show you all the new ones and what they're doing. And then, you know, come Tuesday or come Monday trading after day, I'll just clean out last week and it'll just be blank, because I'm noticing there's that Saturday morning where I need both of them in holdings because it's very visual there, right? So here's all the trades they did. They closed out these 1540, right? And I knew they would because they wanted to capture all that cash, especially, you know, now they did this before it pulled back as much as it pulled back. So they got a fair amount. I didn't really examine, you know, how far into it they were, because they got 282, but there's a whole month to go. So I think they kind of did everything right around the same time. But to me, it was early. They could have saved those other weeklies, but, you know, yin and yang, it'll all work out. So they closed these out because they sold a call and bought a close to the put, right? Here's what they do when they add one. This is your normal buy a call, sell short a put. And they just rolled to 1550s, right? Makes sense. They were at 1540s. Why would they do that? Well, they would do that because they want to collect cash. And we look decent this month. We're not in a big hole, and I'll share that with you. So that's the good news for Misty going forward, right? And then they had to do all these buy to close. Every one of these was a 6-7, right? And they were the 1610s that I harped at. We had to pay $54.74. We sold it for like 41. But at the end of the day, we could have bought it for a penny, 2 cents, right? Because it closed at 15.96. It's below that. Has no value. But because they use the flex option European, they have to, where they can't be assigned. It must be a cash settlement, okay? Anytime during the trading period or at the end of the trading period, you have to do a cash settlement. If I'm a retail guy and I wrote a 1610 call and I'm going into expiration as 15, I just let it expire. I don't have to spend any money to come back, right? But I also can be assigned when it goes against me. If it's a 1 week out, the first day, the second day, the third day, right? So assignment, and again, somebody asked me to do a video on European options, right? So they select, when they do flex, what's known as a European option. And I had a guy, I always tell this story, the guy say, well, I thought it was, I don't know if my IRA is going to allow me to be in European option. I said, it's a terminology. It's not a geography, right? They call American options and European options because in Europe, that's the style of option they use. This is a U.S. traded stock on the New York Stock Exchange, you're just using this flex option, okay, and you're using, they have to because they can't own the underlying stock because it's a single stock fund. They'd have to have 95% of their money deployed in that single stock, and that would break the rule, and they can't do that. So they mimic owning it in options and keep all that cash. 90% of everything is all in cash, treasuries, money markets, and then they put these sophisticated synthetics and sell the naked calls. And all that other cash and money is collateral, right? So they don't have a margin call, if you will. And they never get put to stop. So sorry, I rambled, but somebody asked me to do a video. I will. I'll do a deeper video on just how all these synthetics work, and every YIELDMAX single stock fund operates exactly the same with all of this. Okay, so they bought all these back, and then they sold their bulk of the new ones out 1 week, right? These are all bought back. They closed the existing ones, and they rolled the synthetic, and then they sold their new ones. So they got 36.23 when they sold it, and it's only worth like 21 now. That's what I was talking about winning. Okay, let's jump in, and I'm going to go over to, okay, I better show you the synthetics, right? I have both the tabs. So they closed this out, minus 1227, okay? And in the process of closing out the 1540, they put cash in their pocket, right? This June number, in case you want, yesterday was positive 1,704,000. So when we went to payouts, right, we had a 1,704,000. Okay, but we came along here in this 1540, and we closed that out, and we gained like 16 million, 17 million, right? So it jumped up to 15. Now let me make sure I'm adding that correctly over here in payouts, because I thought I had that. Yeah, 1540 is C33. Okay. Well, we did have a little loss, the 1,704,000, that stays, then this new 16, 17 million, and it leaves us with this number. I just got to double check because this looks good, but I don't understand why that number is that. So I'll double check that for you guys. Let me look at my 1550. I need to show you that one. Oh, okay. So we took the loss on the 1550. And that makes sense because when we roll to that, it's a bigger number and we're over that. So when we bought the call, but let me just make sure, I got 1,227 contracts. Okay, I sold it for 273.9, and then I bought the calls. I sold the puts for 17, so that's like 16.4. Okay, that's what happened. Yin and yang. We won on one and we lost on the new one. We didn't really lose. Okay, let me explain this. We piggy bank lost, right? We had to spend this amount of money and we only collected this amount of money. But look where we are at the end of the day with owning all of these contracts, right? And that's what time period it was so volatile. So we now have a $10 million paper gain. And that's real. We haven't cashed it in next time we roll, but it cost us money to get in there. But we made a bunch to get out. So that's really a bunch of steps. You don't find this too often on a Friday where they close the synthetic and open another synthetic and do it all on the calls and everything. Like Coney closed out on Thursday ahead, so they wouldn't have to roll, and they don't even have to do another weekly. Misty did everything. They weren't in quite as bad a shape as Coney was. So going forward, we're okay, right? We got a 40-cent gain, and looking on our short. And now you have to consider this. So we got a 2 million profit here, 2.2 million, which is really the 40 cents, right? This is the reason our overall gain's 32, because we got a small loss. But we had a 174 on the previous day, so the Thursdays and Fridays count toward June. All right, let me show you in the holdings. This will tell you a lot. So here's that new synthetic showing the 10-7 game, right? It's now a 15.50. I did everything except for these little guys. I put all the right numbers in there. Okay, and then this, what I did here, I did something different. Before I used to have one or two of these greens where they wrote them during this week before it expired here. And I just didn't roll it up into the total. But I wanted to be able to show you that movement and how they lost on one but won on another, because they did it earlier in the day when things were priced higher. And remember, the drop helps these, right? The synthetic, it doesn't help. But all of these weekly calls, that drop helps. But they sold these before, right? So let's go through. So this is the one that they paid $54.70 for, right? I got it right here on the sheet. But the end of the day, this would have been worth nothing. They had collected 3,189. They had to pay 5.2 total, right? So they lost 65% above what they had to pay back. This guy, they only lost 44, and it's smaller. This was the one, so they took, you look at it this way. They had collected 3.7 million, and they paid 5.5 to get out of it. But despite that, this guy, now, the paper value of how much they're up or whatever doesn't matter. This is real. They're done, right? They had collected this. That's a real item. Now they have a liability depending on if it's above or below all these strikes they've written at. And sure enough, it was still high, you know, the first hour, 2, 3, and they just took it off the table. And then they wrote some new ones, but that drop then gave them more paper money gains, right? These haven't been actualized. But we're ahead of the game. Now, these things could go up and run by, but we look awesome when you look at the weekly, when I go show you that, because we're far out of the money with that drop. So I know this is a lot, and it's a lot of math, but it's just how complicated these products are. There's no other way to really tell you. Okay, so on the weekly, I'm going to leave this alone and always show the new. But here on my holdings, just for that Friday part, I'm going to leave it here so you guys can all visualize it. And then this is all the new stuff. This is the very last one, right? I think we got 36 or something. So we sold 4.1 million. We've already collected, if you want to look at it right now, on that Friday, we got a week to go. But it has to be above 1,800 to hurt them. We're trading at, what did I say, 1596? Yeah, 1596. So we're looking good. We're 12.77% out of the money on that guy. We're 11% out of the money. We're 7% out of the money. And look at, well, actually, you know what the issue is here, guys? We're further than that and better than that. This is when they were written. They're using these prices, 1694, 1656. So we look sweet. So we go over here to weekly and you see it, right? Because I'm using this number. So we're ahead of the game. But again, these are 95 contracts. It's not even 10% of 1,132, right? So I'm showing you the loss. Okay, we lost 5501. We had collected 3839 and had to pay 5501. This is what we collected already here. And remember, if new money comes in the fund this week, they'll write more weeklies. And we're already 48%. We could buy it all back for, what did I say, 2.25. So we've got a 43% gain in one day. Now, a couple of these have been written, you know, on Thursday. This one was just written on Friday, but we lost over here. So that's why I didn't jump down the throat of the guys, right, of the fund manager. But it seems like they wait till the end of the day most of the time on Friday. They probably saw that up there and thought, oh my God, Mister's going to run and we're going to lose way more. And they probably just didn't want that pain. So they took the pain. And it could have been worse. You know, what did Coney have one where they paid triple the amount? Can you imagine that, you collected 3-1 and you spent, 18 or 16 million to buy it back? Coney's was ugly. Okay, I think I informed you as to what's going on there. Let's just look at payouts. Let me give you the shares. So 75,000 shares, 1.1%. So again, people are dividend hunting, and that's interesting. I forget which one. I don't know if it was Kurt or somebody told me that, hey, I figured it out, Bruce, I'm buying on X dividend. Well, it makes a lot of sense because it's going to reflect the loss unless the market's really bullish in the pre-market and it starts rallying to make up, the ex-dividend. But you had a day like Friday where it just continued down, right? Or later in the day. I didn't watch the markets other than the first hour or two on Friday, so I don't really know what caused it. Was it economic data? Why they turned down? Yada yada. So it's just something that happened, and at this point, I'm not sure I care about going back, but I'll go listen to some stuff. And by the way, you guys may have said I did an NVIDIA. What is the impact of the stock split? Because I get that question a million times, and then I get new subscribers, and they haven't seen the old, and they ask the question, and so I just wanted to inform people a little more about NVIDIA, what the impact is. In Virginia, you ask a great question, and I explain what it does to the stock options, and just tried to do as best as I could so you guys can understand that. I had a couple of typos in it. I had my fan going, so there was some static, so I've turned that off. Hopefully it's not my actual microphone, and this sounds better than that earlier one. Okay. So these are the second batch. We're doing good. We closed at 3102. They're saying fair value is 3145. You know what this looks like. And this isn't, I'm going to leave this here and I'm going to do my graph. But in some fairness, this was all the 1540 and then this became the 1550. But you want to know where we are. This doesn't show up over there in this, right? When you look at this, that's paper. This is piggy bank, right? This has happened. That's just a paper value. And that's kind of what I was banking on YBit. They had a big paper value win, right? And also, sometimes they get money in the piggy bank, but they got a huge paper loss, right? That they're not going to be able to get out of. And then YIELDMAX has to decide, do they want to, the fact that they have this big loss, do they want to accept that big loss? So there's some interesting dynamics. I kind of love it, trying to assess it and trying to be accurate. A couple of people ask, I am going to do a forecast. It's probably Monday that it's going to come out on Ulti, YMAX, and YMAG. I mean, a bunch of you might not care. Some of you do. I like doing those forecasts. They get a lot of views. They help with subscribers. So I'm going to do that. So let me know in the comments if you guys, I know a bunch of you now understand it from watching my videos, but I really should do a how do the YIELDMAX funds work, right? Exactly. Just explaining the synthetic, explaining they call them covered calls, but they're really naked calls, and how they make money out of that, right? And how they operate, and especially for new people that are even thinking about it. And most people, even when you tell them it's a synthetic option and it's a European, unless you can contrast it, unless you've sold options before, how are you even going to understand what the difference of European versus American? Well, if you've been assigned and you have risk, right, and you don't want that stock, but they're assigning to you because it dropped a lot in value, you're going to get, a margin call possibly. And they can't own the underlying by the very nature of the SEC rules and their prospectus and how they're defined as an ETF. So that has more to do with it. And the fact that they actually have to negotiate and buy a price back, whereas in retail you don't. So I like the advantages it brings, but only an institutional player can move into the flex market because their volume requirements are huge. You know, who's going to do 150 contracts on MicroStrategy or NVIDIA? You know, and have, you know, 90 million that you need in capital to write those calls or puts. So that's why it's institutional. It's firms, right, that doing that level. And that's why I always tell everybody, you're getting this sophisticated stuff and you're paying a 1% fee. Yeah, there's risk, but there's almost no more risk than the underlying security. Right? If you buy Microsoft and you make a 30% yield in YIELDMAX, what's the difference in if you buy, you know, 20 million on your 100 million portfolio in Microsoft? There's not a lot, right? You got the risk of the stock. If Microsoft crashes, then you're going to lose money. Anyway, I'm ranting. I think it's a good rant because it's educational, but I'm done, right? I got more videos to do. So we're not bad. We're sitting on a 40-cent gain. I love it. I want to start the month off good, right? And I think that's what the fund manager wanted to do as well. Okay, not financial advice. I'm not a financial advisor. Bruce out. Have a great weekend. There'll be some more videos coming. Again, not financial advice, not financial advisors for fun and entertainment. Okay, guys, see ya. Bye.